Hey guys, James here with Waterford Business Solutions. And one of the things that we see clients struggle with a lot is integrations with third parties outside of their accounting platform. Now, a lot of our clients end up using QuickBooks Online, QuickBooks Desktop, or Xero, so those are the ones that we are most familiar with. But almost any accounting platform, even when we bring in Sage or other systems that are out there, can generally have some type of integration with third-party softwares. Today we really wanted to talk about payroll softwares and their integrations because we see so many clients screw up these integrations and mess up how these integrations are working, which affects the client's productivity and ultimately affects the client's books. And that's never something that we want to see. While you do have built-in payroll solutions with Intuit, like QuickBooks Online Payroll or QuickBooks Desktop Payroll, that those pretty much map themselves. It makes it super simple, and while we can go in and we can screw around and mess with some stuff a little bit here and there, it's not really going to allow us to make mistakes or mess anything up because QuickBooks knows how it should be integrating with itself. But when we get into other payroll solutions like Gusto, like Paychex, like ADP, like Patriot, all of these have different integrations, and setting up these integrations can lead to a lot of mistakes and a lot of issues. When we're working with these third-party systems, they're not looking as much at directly what's in your books. They're not looking as much as to we should be limiting to these types of accounts here. So we see a lot of times where clients set up integrations where they're putting all of their payroll onto their profit and loss and calling it all expenses. And that's not correct. Certain taxes are expenses. Next week, we're actually going to go ahead and sit down and talk about that there. But other taxes are liabilities that you're withholding from the employee's paycheck. So we need to make sure that we set those up correctly so that we're showing both the actual pay that is coming out in wages, the taxes that you as the business are going ahead and covering, and then what all you owe to other agencies outside of what you're giving to your employees by paycheck here. So the federal government with W-2 withholdings or federal unemployment or something like that, state governments with unemployment taxes or state withholdings if your state has that. So we want to make sure that that's all set up correctly. And while we see a lot of mistakes there, where it starts getting complicated is where businesses get into providing benefits to employees. While those systems work decently well, and well, generally if you take your time, read a few things, you can make sure that it's all set up correctly for taxes and wages. Where it doesn't work well, or as well at least, is going to be for benefits. Let's go ahead and say, for example, with benefits, you're going to have a health insurance policy that you're providing your employees. If you're going to say that you're going to cover 50% of that cost, well, of that, let's just say a $300 bill. I know that's probably a pretty small health insurance bill per month for someone, but let's just use easy numbers here. And you're covering 50% of that, $150 a month needs to be recorded as an expense on your books for you, and $150 needs to be withheld from the employee's paycheck. We still need to show on the books that you paid that employee the $150, but you're not physically going to get the employee a check for $150. You're going to give them a check for whatever their wages are minus that $150, because you're holding on to that $150 to give it to the health insurance company. The same thing here goes for dental, vision, life insurance, AFLAC policies, anything like that. If you are withholding money or the employee is paying any portion of that, we need to make sure on your books that we're showing whatever portion the employee is paying is coming out of not your wages that you're paying them, but out of the check that you paid them at the end of the day. So the wages would still reflect everything pre-deductions here because that's what you physically paid them. But the paycheck at the end coming out of your bank account will be less all of these deductions, and all of those deductions will go down and be a liability on your balance sheet until you pay off that liability at the end of the week, end of the month, end of the year, depending on what your schedule is for paying those liabilities. It's super important that you make sure that you set up these integrations correctly. Because if you do not set up these integrations correctly, it's going to give you a false number for what your labor metrics are on your books. And it's going to show that your labor metrics are lower than what they are. And it's going to show that your benefit expenses are higher than what they are. Because we don't want the payment going to United Healthcare or Humana or Aflac or whoever you may be working with going onto your profit and loss statement or your income statement. We want to see all of that hitting on balance sheet liability accounts because all of that is just paying off money that you have either withheld from an employee or through payroll given them and is showing on your P&L as benefits. If we're not doing that, it's going to cause multiple issues here. Like I was saying, labor metrics, benefit metrics, all of that can be substantially off, but it's also going to screw up your balance sheet. If we've got stuff going to the balance sheet and not going to the balance sheet correctly or being paid correctly, it's going to show that you owe a ton of money that you don't owe. And that can cause a major issue there, especially when we're trying to clean up and get your books accurate. The other side of everything that it's going to affect you there with is going to be on your taxes. On your tax return, we have to report the wages that you paid, and the IRS normally cross-references and cross-checks the wages that you paid to the W-3 or the summary report that you send to them showing all wages paid and all taxes that you paid the IRS. So if your wages paid and your taxes paid do not match to that report, it's going to cause an issue and it's going to cause a problem there. Is it a 100% instance of getting a red flag for an audit? No. But it does increase your chances for an audit, so we want to make sure that everything is accurate. And we want to make sure that your books match your tax returns and they're not two separate situations going on, because in the event that you're audited, they're going to want to see your books and they're going to want to see that the books exactly match the tax returns. If the books do not match exactly the tax returns, it's going to cause questions. They're going to want to dig deeper. They are going to want to ask more questions, and that's the last thing you ever want in an audit. In an audit, you want it to go as quickly, as smoothly, as cleanly as humanly possible, so that you don't have to spend more time, pay more money if you're working with someone or an accountant to represent you. That's going to be a big deal. So it's super important that you make sure that you go ahead and take time to get this all accurate. When you're working with these third-party integrations, a lot of times you can reach out and talk to their payroll staff or their support staff, and they can generally help you pretty well through the setup of these integrations. If you are still having questions, it's really important to reach out to either your accountant or an accountant who is familiar with working with integrations with third-party systems. If you are working with an accountant who doesn't like integrations or tells you integrations mess things up, you might need to look for someone else, because an integration set up correctly is going to help you out and keep things more accurate than not putting in the integration in the first place. So super important to keep in mind and remember there. The other thing with integrations is going to always be to know what system you're using and know how that's going to affect your QuickBooks. So don't just say, oh, I like the pricing of Paychex, I like the pricing of Patriot. I like the pricing of Gusto. Take the time to understand every single facet of these payroll integrations, from how they look for the end user, for your employee, what type of options do they have, what type of benefits, how they work for you as the employer, for recording everything, paying everyone, putting all the information in, and how they work with integrating with these third-party systems. We definitely are not huge fans of the integrations of Paychex and Patriot because they don't work really well compared to when we're looking at ADP, Gusto, or QuickBooks for payroll. But there's always a way to make something work as long as we're working within the parameters of the system. It's always important that you work with someone who is there to support you in your goals and your business prospects. If you need someone like that, or if you've got questions on how to get your payroll system integrated or how to work with your payroll system, please feel free to go ahead and reach out to us here at Waterford Business Solutions, and we'd be happy to talk with you and walk you through what you can do there. Give us a call at 864-351-0852 or shoot us an email at info@Waterford Business Solutions. In the meantime, I invite you to please like, share, and comment on this video and subscribe to our channel to get more videos just like this in the future. We're here to help you and empower you to run your own business and educate you on what you need to do there. Until next time, have a wonderful rest of your day.